Hello and welcome back to the Global X Express Lane. Last week, Australian and US equity markets both headed lower as investors contemplated the inflationary impact of the war in Iran. US equity markets were headed higher due to the fact they had strong services and manufacturing PMIs. However, a weaker than expected labor market report towards the end of the week sent equity markets lower. Now, with inflation rising and unemployment also in risk, investors are now concerned around a stagflationary environment forming in the US. For the green light of this week, crude oil prices are likely to continue heading higher as the war in the Middle East continues to rage on. With the Strait of Hormuz responsible for roughly 20% of oil transports across the world and also wider Middle Eastern oil infrastructure under threat, oil prices are likely to continue staying high or head higher until there is a meaningful de-escalation in conflict. For the yellow lights of this week, while precious metal prices have been heading lower for the past 2 weeks, there is a chance for that narrative to flip on its head if there is a prolonging of the conflict in the Middle East. With inflation heading higher, there is a chance that the Federal Reserve's rate cut path may be complicated, which would be a net negative for economy and equities, but a positive for the gold prices. For the red lights of this week, the Australian materials sector may continue experiencing weakness as markets reprice global growth to be lower in the face of inflation. With global growth lower, demand for commodities such as iron, copper, and lithium may also head lower, which will continue exerting pressure for this materials sector. Thank you for tuning in to this week's Global X Express Lane. If you have any comments or questions, please put them in the comments below.